For more on Twitter and Elon Musk, we're joined by Daniel Eves, Managing Director of Equity Research at Wedbush Securities. Welcome back. Good to see you. We'll take a little break from the bloodshed in the marketplace, as this was one of the few stocks that actually held up relatively well today. Elon Musk doesn't want to buy Twitter, I'm assuming. What do you think the real reason is?
Look, I mean, obviously the bot fake account issue, that's been front and center, but we've thought from the beginning that was more of a scapegoat. Cold feet, market changed. I think he underestimated what a gargantuan task would be buying Twitter. And now backs against the wall, especially going into Delaware in October. Zacco, I mean, for Musk, that was like a kid Christmas morning finding a gift under the tree. I mean, it's really been a leg to stand on, when it comes to this battle of Twitter and Musk.
Right. So the stock right now is trading roughly, last I checked, about 25% below what the original price of the deal was supposed to be at, I think like $44 billion. If Twitter came back and says, we'll do the deal, we'll shave off 25% or 30% or 40% from the original deal, would Musk say, no thanks?
Well, I think it's a great point because, look, for Musk legally, once he steps into Delaware October 17th, it's high risk, high reward, because we believe he likely walks out of there needing to pay anywhere between 5 and 10 billion to Twitter in terms of an out-of-court settlement, or forced to buy Twitter 54.20. So the street's thinking, and then we believe, somewhere in that $48 to $50 range is ultimately where Musk, from a good negotiation, gets almost forced into this deal, probably over the next month. Otherwise, once they step into court, this is going to be a Game of Thrones, and he likely loses.
Is Twitter the company that we want it to be, or is Twitter the company that we think it is, even with all the fake bots and the fake accounts? And look, what social media company doesn't have some of that? So I'm going to kind of brush it off a little bit. But at the same time, do we really understand the business model of Twitter?
I mean, let's take a step back. No one in their right mind would buy Twitter at $44 billion. And it goes back to, there was not another bidder miles from where Musk was willing to buy Twitter, which speaks to the whole issue here, is that it's been an uphill battle from a monetization perspective. The bot fake account has not just been now, this has been front and center really for the last few years. Social media has clear headwinds, and it would be an Everest-like uphill battle once Musk buys Twitter to then monetize it, and you're never going to get back that $44 billion. So look, and that's why what's coming out in the Zacco claims, he's feeding the fire of some of the conspiracy theories that are really giving meat on the bone, especially on the security issue and some of the other concerns you brought up.
What is the issue? Because this is relatively new. What is the issue with the security issue?
I mean, Zacco's basically saying that the security is lax, and that Twitter, from a data perspective, internal and external issues, and that's a big thing for the Beltway in terms of whether it's international, or, whether it's spy things, other things that sort of Twitter's always fueled, especially when it comes to political and other sort of censorship. And now that's going to ultimately come into court going into October. The judge is going to allow the Zacco testimony, clearly more in the bot issue, but the security issues, it's a black eye for Twitter. And I think it's a Pandora's box that ultimately opens up.
You are with Wedbush Securities, which is a pretty big name firm. And if Twitter came to you and I said, hey, I'm coming to you, Dan, help us out. Help us fix this problem. We want to sell the company. What do you think the company's worth, and what would you do?
Mm-hmm. Well, we think it's worth anywhere between $28 to $30 a share. So fundamentally, I think that's where the stock would be trading right now. 54.20. I mean, that's basically, look, they're popping a lot of champagne when they got that bid, because that was, in my opinion, that was, call it 15, 20 billion more than it's worth. And it comes down to monetization and social media headwinds. Twitter's really been almost a tangential player in social media, especially now with TikTok and some other headwinds competitively that they're seeing.
Since this drama of this deal has unfolded the past couple of months, we have seen Facebook, now called Meta, the stock pounded again today. We've seen on and on from Snap. You name the social media company, they're all getting hammered because their revenues are driven by advertising that advertisers use online to target their users. And there's only so many apps you can have on your phone. So I don't know how many ads you can watch, but it seems to me that we've reached a point of saturation in the social media world. I just want to get your take on what you think the future of social media apps, both for the company's perspective and consumers, looks like in 2023.
Oh, it's clear headwinds. I mean, from a digital advertising perspective, the stocks are reflecting that. Apple privacy issues. Anyone that has an iPhone, do you want to be tracked or not? I mean, that's been significant in terms of gut punch to the models. And now you have Facebook changing their name to Meta, going toward the metaverse. You have Twitter looking for other business models, Snap as well, looking at AR, VR. It just shows, I think, the best days in the rearview mirror. And that's why Musk basically woke up one day a few months ago, be like, why am I buying this? And that's why, right now, it's hard to sort of take that back. And that's going to be the issue as they go into Delaware court.
It's a wild world out there in the social media land. Daniel, thank you for helping us, I guess, better understand this. And next time we're going to get some picks from you, okay? Have a good evening.
Yeah, you too.
Excellent stuff.